Alright guys, welcome back to my channel, and today I'll be taking you guys how to mark out what valid point of what interest. So let's kick started. So what are points of interest? A POI, a point of interest, is an area where market makers would place orders for price to come to retest it and respect those, and most of the times price respects those zones. So there are two types of points of interest that I trade. We have the order blocks and the breaker block. So let's start with another block. So what is the order block? So another block is the first is candle that caused the break of structure. So let's say we're in an uptrend. You can see higher high, higher low, a new higher high right here, and this is the break of structure right here, right? So the candle that caused the break of structure is this candle that is somewhere here, right here. So what we're expecting? We're expecting that price should come back and pull itself back into this zone to form another break of structure. The same thing goes for in the bearish candle movement right here. Wait a minute. So in a bearish scenario, right, you can see this lower highs, lower low, or lower high, lower low right here. So price came here and formed a break of structure. Alright. So it's coming to you can to denote that price is going to come into this level right here. So this is the first this is the candle that caused the break of structure. So expecting that price should pull back into this level right here and form another break or structure. So that is that. So now the second one is a breaker block. So what's a breaker block? A breaker block is known as a failed order block, right? So let's say in a bullish market, you can see the sequence of like higher highs, higher low, and a new higher high right here, right? So price came here and formed this break or structure to the upside right here, right? So there's this demand or a zone that is here, right here. So this area here is the expected zone for where sellers are meant to come into this area and sell the market right here. But what the price do? Price came here and violated this order block and turned it into a breaker block. So expecting that price comes back to this breaker block and not push on like this, forming a new break or structure. You understand? So it's almost the same thing in the bearish scenario, as you can see here. Bearish scenario, you can see this lower high, lower low, lower high, lower low, right here, right? And price came into this level to form another break or structure right here, as you can see here, right? So what happened here? So we have this area here that price was supposed buyers are meant to come into this level here and push the market like this to buy. But what the price? The price came here to violate this but supply zone here. And what the price do? Price came back into that area and turned into a breaker block and from another breaker structure. As you can see, a breaker block is a failed order block. So this order block here failed. Price failed to use this order block to buy, right? So in that, price now came back and used it as a zone to sell. causing this to be a what? A breaker block. So now let's go through the rules in marking out a valid what? Point of interest. So the first one is to identify the what? The trend. So you need to know if the market is bullish or bearish. So as a beginner, if you can't be able to identify this trend, can you go back to my channel, to my page, and look up what Genesis of Analysis. I created a video on that. Also, don't forget to like, share, and subscribe. So let's continue. And the second step is what? There must be a double break of structure or a what? A market structure shift. And the third one is that there must be liquidity or inducement protecting it. And then the fourth one is you have to mark out the zone closer to the what? Liquidity. Alright, so let's do that right now. So let's identify the trend. Let's say, for example, you're in an uptrend, alright? And then the second one says that there must be a double break of structure or a market structure shift. Okay? So now let's do like and the bullish market right here. Alright? In order for price to come and form this break of structure, there are internal structures here. Right? Price don't really just move straight like that and forms a break of structure. Can you see? There are internal structures right here. This. So price came into this level right here and formed what? A break of structure. And came here to form another what? Break of structure. So this is known as a what? A double break of what? Structure. So you see, price came into this level right here and broke this one and broke the second one at the same time, right? Forming, without pulling back, forming on a double break of structure. You get same thing again for a for a bearish candle. So price came here. Now, in order for price to come in to form this other break of structure, price came here, formed this internal structure like this, and broke this structure here. And you see, so the movement broke this level right here, and so came here to break this structure here too. So it formed another what is a double break of structure. Alright. So the third one is that there must be liquidity or inducement protecting it. So let me explain that. So what is an inducement? An inducement is the what? First valid pullback, right? After it was a break of structure, after a double break of structure or a market structure shift. Now, let's use this now, right? So you can see here, so this is a double break of structure right here. So price came here and pulled back, right? And formed this high here. So this area now, you can see most people will come here and say, okay, because it's an uptrend, you'll come into this level right here and come to buy. I see that price will now come here and take them out right here and use either of these zones here. So that is that. So he now said that he had to mark out the zones closer to the inducement of the liquidity. So you can see this area of demand is what price came into reacting to already. So it's already mitigated, right? So it won't count. And this area 2 here is a zone. Price has already come to mitigate, and so this area won't count. So we are left with this area here, this area of this other block right here. So this other block here is closer to liquidity. So expecting that price should take this area as its inducement and react to this other block to form another break of structure. Can you see that? Price came here and formed a what? A break of structure. And the same thing goes for a bearish candle, for a bearish movement, sorry. So price came here like this and broke the structure here. So before price went to break the structure, it continued with its downward movement like this and broke the structure here, forming this what? Double break of structure here. As you can see, this is a double break of structure right here. So price came. So now notice this price now pulled back to form this inducement. You can see it's level right here. So this area is an area of inducement. This is a fake break of structure. So price came into this level. This breaker here has been mitigated already and it's invalid. This breaker here too has also been mitigated and is also invalid. So it has been validated by price. And now we are left with this other block here. So this is the other block that is close to this inducement right here. So we're expecting that. So price is going to come into this level right here and would sell. Stop loss. See this and would sell. So that is that. So now let's move into the price first chart. So what is rule number one? Let's bring here. Number one says that identify the trend. So now looking at this, we're able to tell that it's bullish, right? So we are not looking into this area, right? We are just basically focusing on this for now. And this for this video, focusing on this area right here. So you can see that price has already, okay, let me reduce this here. Price has already, right here, price came here and price already broken out from this trend line right here. And you can see here, we already know that, first of all, price is looking out for this trend line, knowing that yes, we are bullish now, so we're looking for buys. That's what's coming to your mind. That's the first thing that's coming to your mind. Second one is that, now, this area here, price mitigated from this breaker from here, right? So, now let's zoom closer. So price came here and formed this market structure shift right here. Can you see that? Price came here and formed this market structure shift and reacted into this area here and bought. Can you see that? Now, see it. What is the rule? You identify the trend as bullish, so that there must be a double break of structure, a market structure shift. But in this case, we saw a market structure shift, as you can see here. The third one is that there must be an inducement protecting it, and this is the inducement here. What do we say an inducement is? The first value pullback after a word break of structure. So you can see this inducement here, right here. This is the inducement right here. So now let's see this area right here too. Price came here, broke the structure here, and also broke the structure here. So this level here is known as a double break of structure. Now if you look closer, you will see that price came here and formed this inducement right here. So you can see, so this level here becomes the next, this is a break, this is a area that is closer to the inducement or the liquidity right here. And same thing again is for this area. Price came here and formed this MSS, the market structure shift right here. So what did it do? Came into this level. Now price didn't react into this other block here, but and that is how you able to denote this level right here. So you can see again, look at it. Price came here and broke this area here. So price has reacted at this level. So the next area of other block should be here, because this area here. you can see, which price came into this level and bought. And the same thing on how the markets move. And I can see this area here. Price came here, formed this breakout structure right here, and what this other breakout structure right here too. So this level here is the inducement, because when price came here, after price bullish structure, price pulled back into this area here. So this zone is called invalid. So the next zone is this breaker here. See, price came here and reports. So that'll be all for today. So we advise that you go into the chat and practice this, because practice what makes perfect. So see you guys next time. Bye.